Good morning. Predicted Trades family. Hope everybody's doing good. We had a bit of a boring day yesterday, but we got a couple of good legs and then a fizzle into close. Overall, we held the mean yesterday on ES. We can zoom out a little bit and have a quick little review where we came from. Had our reversion of the mean on Friday that we talked about for a week or two. It was building and coming off of these key levels. And once we took out that zone, it was a quick acceleration up to the mean. Now we're consolidating at the mean. Holding it nicely yesterday during the cash session. Little slip overnight just to tag some squeeze bottoms and retest those lows. And Friday's highs. And right back up. We are actually about to open right near the same spot we did yesterday. But now, since we were sideways yesterday, we have a 1 hour and 2 hour squeeze. The top of that squeeze is right at our next zone that we would need to get through, to accelerate up to the daily 50, which sits up at 40.40, slowly making its way down. Yesterday it was at 40.53, now 40.40, and in another day or so it'd probably be down to 40.30.25, something like that. We are right at the daily mean and above it. We do have the daily 15 and 8 right below, stacked on top of each other and about to flip back at our key zone that we needed to take out in order to get to the mean. So we can just go sideways, especially with some stack squeezes like this. Should we start to give out the mean, if we keep testing it. Sorry, let's zoom in just a little. Come on. Ooh, a little too much. There we go. So we are at the daily mean with the 8 and 15 below. So we're at a huge liquidity pocket. Institutions love to buy off the daily means, the daily averages. That's why we track them. If we can continue to stay above and keep bouncing from the mean at around 3,900 up to test this zone and then get through it, we can talk about more upside pushing off of the mean. Should we start to lose the mean and yesterday's lows and get down to test the squeeze bottom, we can make a slip down to tap the daily 8 and 15. They are set to cross each other, and sometimes when moving averages cross, they can become a magnet. Not to say we're definitely going down. It's just a scenario we should be prepared for. We can slip from the 21 down to hit these, move right back up, and keep on going. And when we have our moving averages in a tight little range like this, just 40 points, we should be expected for some sideways action and maybe bouncing between them before we finally break down or finally break higher. So, for today, we're opening in the same spot. We had a nice dip yesterday to fill the gap and retest the highs. And yes, we set, obviously a higher high on Friday, but we spent hours at these highs, so it's not surprising to see our low wicks come right back to test those. Especially after an end of day pop like that. This kind of a quick gap fill to retest midday highs, a late Friday pop like this, a lot of folks are gone. They already left for the day. That's why it goes sideways like this. So they love to pull it right back to where they left and then start the journey. So I'll be prepared since we are approaching these squeeze tops for another dip, just like we got yesterday, to fill the gap, which, you know, is about as equal as yesterday's. So we could get the same scenario and then come back to try to push against these squeeze tops in this zone. We could also bounce at, or go up at open straight to our squeeze tops and grind against them in these key levels before kind of a late morning fade back to support and then push into the clouds. We've seen these kinds of days, right? Just like this, where we can push up in the morning against the clouds, fade back to support, come back to the clouds. It could be a day like that. So I just like to always try to prepare for all of those scenarios. Ultimately, the mission, if we live life above the 21 and intend to head higher, the mission is 4,000 and that daily 50. Sorry, let me get this out of the way. And let me do this. So we can look at our squeezes. So on ES today, we have a 1 hour and 2 hour. In fact, on all of the indices, we have a 1 hour and 2 hour. And for ES stacked, kind of at yesterday's pre-market high, at that key level. Above and down below, the squeeze is basically back at the overnight lows, yesterday's lows, and Friday's highs. Basically down to that 38.80. So let's be prepared. If we keep grinding up into these clouds near open, we might struggle, come back to fill the gap, then come back up. If we can't hold the 21 and get a nice bounce off of it, get through it and reject it, we'll get down into these squeeze bottoms at 38.80. And we always have the 8 and the 15 down there as a magnet right back at our zone that we had to get through. So it can be taking off from a zone just to arrive at a zone and get stuffed. And you have to fall back to the previous zone to come back again, right? So be ready for those scenarios. Real quick on our economic calendar for today. We do have some data coming out at 8:30 and 9 a.m. and 10 a.m. So every day this week we have some economic data at 8:30 and then some other things that trickle in later as well. So be prepared for some sideways action with all the economic data coming out this week, especially after a good push to get us back to the mean and back to a zone. We are coiling right under a key zone that we need to get through to head higher. By coiling, just basically meaning getting up to that zone and just building energy sideways to get up and test that zone before the next move. We can always give out. Basically, buyers need to keep stepping in to provide momentum to get through. Let's see, and we do have POC back at 37.73. That's pretty far below, but not surprising because it is where we chopped around last week. So let's see what we get today. Let's see if 3900 can hold, and if we can get up to 3950. on NQ. Same thing. We are stuck between some squeezes. Looks like we're going to open kind of in the middle. On NQ, it looks like we are going to open a hair lower than yesterday, whereas ES is kind of closer to where it opened. We'll see what happens at 8:30 if it causes us to start fading back. If we open near lows, just looking for some taps of squeeze bottoms and the 21 to take off again. You can see NQ did not get back to the 21 yesterday. It remained strong and stayed in its squeeze. So NQ could take a dip to the 21 if we fade into open to officially tap it in the bottom of the squeeze for a bounce. And we are kind of chopping around that 12,100 that I said is a very key level. I mean, we have the mean right below us, but to arrive back at this level, it's very key. We will chop at it until we find the next leg up or down. So let's see if we can hold it into this economic data and use it to push off of, or if we fade below it before open and want to get down to that daily 21 for a tap. We hit it overnight. Sometimes they want a cash session retest. And we have that psychological 12,000. So as long as we can stay above these things, the 21, 12,000, and especially that 12,100, we can continue that journey higher. Get back to 300, start to get above these squeezes. And the daily 50 is starting to perfectly align with the next key level once we get past 100. So with the squeezes stacked, we know that we usually don't push out of them in a given day. I mean, when they're thin like this, it can be easier to get through them, but now they're getting thick. So chances are we will stay in this range today. Let's see if we push against the top and start to open it up. Let's see if we dip down, tap the bottom before going again to the top. If we start to give out the mean, 12,000, we'll probably drop straight to the 8 and 15, which are crossing over. On to the ready. Oh. There we go. So on the ready, we still have our daily 50 about 30 points up. Let's call it 40 points up. Yeah, she could get there today, technically. But we do have the squeezes in place, so just like everything else, the ready did get up above yesterday's high and set new highs, which NQ has not, and ES has not. Yeah, I just wanted to confirm because I was about to say neither of them have, but the ready did, so it could be an early indication. Let's see if the ready can get up and start testing that again. If it takes a little break and then can get through, if they're rotating into small caps, that can be bullish, and that we could see them kind of react first, just like setting a new high. Or if they give up and fall back to the mean first, then it could be an indication that the other indices are going to do that and have a little profit taking. But for the most part, yesterday, dipped down to Friday's highs, got back above the mean and held there. So good sign overall. YM. You know, not too far from its high of Monday morning. And coming up on that next key level, 31,800, before getting to 32,000. Did a good job of holding the mean yesterday and closing above it. Slight dip below to hit the cloud overnight, and then we arrive at the top of the cloud. So let's see if we start to push against it, start kind of that ascending wedge, and then take a dip before heading higher. Let's see if we just hit it and fall back to the mean, maybe even squeeze bottom. Well, like I said, we can go sideways. We're right at the 21 after a long time underneath it. We can easily go sideways as they rotate around to things, get them all caught up, and start to make a decision back up or back down, right? We do also have earnings this week. Micron kicks it off for chips on Thursday. So we should be prepared for a potential just sideways action. One last point I will make on the daily for ES, and maybe some folks that took the AP's charting course over the weekend, or maybe it was 2 weekends ago, sorry. For those that maybe took AP's charting course, he talks about candle combos. And I'm sure he covered at some point, strong candle up, 2 small inside candles can lead to another move. So maybe that's a topic he'll cover. I'll ping him on it. Don't want to step on his toes, but we could see something interesting. Not necessarily today with the squeezes, but depending on how we react to those squeezes, we could see an interesting day tomorrow. So, moving on. Apple. Something I want to always let folks know, because you'll notice we broke through this resistance. We tapped it twice yesterday, but we can't see what it connects to. And in TOS, sometimes when you don't give it enough days. All right, Bob, see you later. Thanks for tuning in. Sometimes when you don't give it enough days, these don't plot exactly correct. So let me just give it enough days to see what it's connecting to. And see, it looks a little different. Now it looks completely different. So, this is kind of looking back these last few months on Apple. We have been on a downtrend from the extreme highs, and then kind of the intraday highs. We have been below that. This recent drive got us above the tighter trend line, and now we are getting close to tapping the extreme trend line. Apple's in a very nice upward channel, as you can see, on a 2-hour time frame. So this will actually be pretty simple. Apple needs to continue to hold this trend line. It's not the cleanest. You could actually draw it a little better so that it's not so extreme up. Let's see. Let's connect. That's actually much nicer. So we'll leave that in. But you can draw this channel. You know, Apple should, at open, pop to test this trend line. If it starts to lose this, it could accelerate quickly back to lows, to the daily mean, and to test the overall sharper trend line up from when this drive started to take off more, right? So let's see if Apple is going to try to lead to the upside to get back to this 144. It only got to 143.5 yesterday. Couldn't even test 144, which is a key level. And we have this trend line from the extreme highs of the last few months. So there's going to be a time to short, folks, especially when we talk about tech, and Apple's a great guide for tech. And right here, you can see 3 nice trend lines from our recent lows. So, if strong momentum is going to continue, we can bounce right at this trend line and keep on going. But if we lose it, we'll fall back to the next. We could catch a bounce there at the 21 and at that trend line to push through this wedge, which is coming to a point. If we lose this, it's a cascading effect, right? Then we'll get back down. So you can short from one to the next. When it falls through, can't get above, and then gives out, right? So anyway, a few nice trend lines on Apple. Let's get back to kind of our normal time frames. And yeah, annoyingly, those shift around. One way to fix that and stay on the same time frame is to just... it keeps opening my menus in another window. Here we go. Is to go to this and time and add days. So we'll just throw 90 days at it so it can stop being annoying. Then we are still on the normal 30-minute chart that we like to look at, and we can see that trend line properly. So Apple, tight squeeze, play the range until it breaks, and as you can see, the trend lines are starting to basically become the squeeze top and bottom. So we'll see a decision made today on Apple, and it could take all day and get a late day pop or drop. It could be that we just drop and fall back to the moving averages below, giving us our first sign, our first failure of a trend line to fall back to test the next and the key zone below. Just like we saw in ES, we could fall back to the key zone below. So Apple's going to be a great guide today with this wedge. Let's see if it just stays in, goes from top to bottom of squeezes, and if it can push out to 144 or back down to the mean and 140, or even as far as this 138 zone. AMD. Let's get back to a normal. There we go. AMD, relative strength, not back to its daily 21. Those are coming down to 90 most likely today, which is, only a few points up on AMD. But like I said, chips could just go sideways this week. Micron reports on Thursday. They are going to set the tone for chips and for tech. If they guide down, if they sell off, it's going to spell more downside likely for the market. And when each tech reports, we'll have an idea of what can happen, just like last earnings, where they basically just sold everything. So on AMD, on chips, I'm basically going to leave them alone until Thursday. There are other things right now that are getting more volume and more attention. But AMD squeeze is getting down tighter on this key 86. Let's see if it'll hold that and yesterday's lows in this first Keltner down, daily 8 zone, to take off higher to get back to 90 where the 21's at. If it gives out the daily 8, which, sorry, it might be a little hard to see, but is around this 86. If it starts to give that out, it could fall right back to this 84.5, 85. Amazon. Push off the 21 Friday, came all the way back yesterday. So let's see if in this tight squeeze, it's going to stay above the 21 and push out to get back to where it started the day yesterday. or if it's going to remain weak at the 21 and fire this little squeeze down to bounce around these daily moving averages with the 8 down below. BA. Still remaining strong, pushed off of its daily 8. So a leader NYM, it's going to get back to the daily 50 today. Kind of opened right at it yesterday. It rejected it pre-market and fell back. But bounced at the daily 8. So let's see if we can get to and through the 50 and keep trucking up to 144, 145. If it loses the 21, I'm sorry, if it loses 38, it'll be back to the daily 8 and the 21. Come on, Tess. At least once a session, toss freezes. Come on, toss. There we go. Cat. Not touching it till it gets above 193. Slowly working its way back. Above this, it has an intent to get back, to 210. But it's weak right now. Google. Came all the way back to the daily 50. And pretty much tapped it yesterday. Let's see if it can continue this up channel and stay above 2320 in a bid to get to 2400. And just double check, where is this other trend line coming from? Yeah. I'm just going to get these off the chart because they keep messing with me. Sorry. All right. So let's see if Google can hold this up channel. If it starts to give it out, it's falling back to the daily 50 again. If it loses 2300, it's back to 2260 where the daily 8 is. And Google has that stock split that's only a couple of weeks away as a catalyst. So we'll see what we get. GS Banks got a big old pop overnight. See if there's any news or anything. I don't know. But looks like banks are a decent part of this gap up, so let's see if they want to continue to rotate into them to get GS back to the daily 50. And look at that. I kept talking about last week, they don't want to mess with finance, leave it alone. And then on Friday, it's like, oh, maybe it's time, guys. Opening right near the top, takes off with the market and pushing for more now. So let's see if GS can get to its daily 50 and if it rejects and starts falling back to the 21. There's a nice range of about 10 points that you could be playing GS. JPM, a little uglier, not even back to its daily 21 yet. So let GS try to lead. If GS can get above its daily 50, then maybe JPM can make its way up to above its 20. Meta. Just bull flagging, right? And coming into a squeeze. You have a wedge, you have a squeeze. Play the range until it breaks. I preach that all the time. That basically means when we get to the bottom, it's okay to try to take a long position. You will be wrong if it falls out, comes back to test it, and pushes even lower. It should be cut. Also, you know, if it fades down here, let it prove itself. Like let it bounce, maybe retest it, and then bounce again, and you get in. But play the range, so long at the bottom, short at the top, until this breaks higher or lower. If it can break higher, moving off of 170, getting through the squeeze top, it's up to 174, 175 to get to the daily mean. If it breaks lower, it's back to 166, 167 to test the daily 8. Microsoft gapping through kind of the downtrend from yesterday. Always watch these kinds of wicks pre-market. It can be a teaser that if we can't get through the squeeze top and if the market struggles, we'll go to revisit that wick to get those buyers to step in again. Back at 264. If we can hold 264 and stay above, let's see if we can get it to that daily 50 and above to that 268, 270. If we give out 264 and the low from yesterday, we could fall back to the mean at 260. Netflix, big old profit taking, but then big old bounce up. And right back at 190. On a mission to get to 198 and 200. When we get near key levels like 195, it's going to have a dramatic pullback. And then right back up. So, not a bad spot. If market rolls over, Netflix probably going back to the 21 for another test at 186, and a bounce there could set up a nice move. 10 points to get back to the daily 50. Nvidia getting tight. Chips could be going sideways, so play the range till it breaks. And if it sits for too much longer in that 30-minute squeeze, it'll probably have a 1 hour and 2 hours start to form around it too. So I'm probably going to just wait for chips to break higher or lower to start to think about it. But again, I think they'll just go sideways into Thursday. QQQ. Squeeze just like everything else. The bottoms of these squeezes are all stacked together right at the daily 21 at 291. If we can hold 290, 291, we can head higher, breaking through 296 and a bid to get to 300, right? The daily 50 is at 304. If we start to lose 290, 291, it's back to 286, where the daily 8 and 15 are likely going to come together today. And we have that trend line from the lows. So if we start to fire these squeezes down today or tomorrow, it's right back to these key things. Roku fell pretty hard yesterday, back to all of liquidity. That's why I always talk about once we get through them and try to push off of them, keep them in view. Because if we start to look weak, if market starts to look weak, you know, market didn't have a big pullback, but Roku erased all of Thursday and Friday and then just settled at the liquidity. If market rolls again, Roku could fall back to lower liquidity like the daily 21 at 90, even 88, before getting back to 100. But let's see if it can hold this uptrend. We'll be opening near it and near the afternoon highs. So it could just hold there, push on through, and get back to 100. There's a few scenarios for Roku. Shop, last day before the split, right? They'll be splitting today after close. So everyone wave goodbye to Shop. Who knows, she could have a crazy day. Last day before split, where she rockets up to 410. Closed around 370 with a 30-point ATR. So she could rocket right up to 400. Or just do nothing. We'll have to see. It's going to be interesting. I'll have some options up on her. Snow. Got back to the daily 50, settled at it yesterday, trying to get higher. We do have that first Keltner up. Kind of the highest so far this week. So, trapped between some key things. If it can break above 154, it could make a nice move to 164. But that'll be the third Keltner, where it's going to be kind of in that overbought. And would likely come right back to liquidity. So, let's see if it can't get through 154 and comes back and loses 150. We could fall back to 145 and start a journey back to the daily 8. Might be a 2-day journey, but we shall see. SPX. When we fill a gap, I tend to let it stop being on my chart. And even if I extended it yesterday, the daily 21 was there, so we would have slipped into the gap just a little bit on the chart, but we have the daily 21 there to kind of mark it as well. Same thing. Today, pretty much, right, we're going to be opening small gap up. We have a gap above to fill. We have a gap below. And we have a trend line. And we have our moving averages. So, let's see if SPX opens probably around 39.20 again. Maybe a hair lower. If it dips down to 3,900 before heading higher to try to get to the gap fill, or at least this key zone, which was the high yesterday. If we give out 3,900, we could slip back to the daily 15 at 38.70, and the daily 8 back at 38.40. So let's see if the 21 will hold and push us higher, or if we lose it and reject it and push us lower. We're also, stuck between two gaps. SPY filled its gap. This one I'm leaving up just because we got through it. We're still holding the bottom at least, and now we're at the top trying to hold. If we can't hold the top, we'll go to test the bottom one more time before giving out lower potentially, right? Or holding the bottom and moving higher. But let's see if the top of the zone can hold us to start pushing us through the squeeze top. If not, we're going to squeeze bottom. If we can get through the top and the high of the week, 395.8, very key level. Big key level. We have played off that one in the past. And if we can't get through it this week, we could fall back to liquidity and start the journey back to a next key level. Let's see what we get. Square, it's making its way back and it's at liquidity. Not a huge interest for me. Squeezes are setting in. I'm not loving the way she's moving this cheap. Tesla opened above that 744, fell back, but held 730, and the highs from Friday. So let's see if she has the energy now, after a nice profit taking and reloading, to get above 744, turn it into support, to get through 750, on a mission to get back to 780, where the daily 50 is now stepped down to most likely today. She has been strong, and 780 is very key, and now the daily 50 is lining up to it, and at the top of this daily squeeze. So if we can hold, very simple thesis, if we can hold 744 and push off of it, this is a big key target we want to get to. 780, daily 50, daily squeeze top. If we keep rejecting 744, we need it to become support. So if we keep rejecting and staying below, we can dip back to 718 and back to 700. The moving average is slowly coming up. The daily mean, daily 21, slowly coming up to that 718. When it arrives, which could even be kind of today, whenever a moving average gets right on top of a key level, it can be a magnet. If we give out 730, probably going right to 718 and tapping the daily 21. If we can stay above 730, get through 244 to push up to 780. And VIX had a gap up on VIX, even with a market gap up. And she just tapped the daily 8, daily 50, and slow fade all day. That's exactly what we would have wanted to see for an up day on the market, but the market didn't really go anywhere. We are arriving back at 27 and Friday's low. If we can stay below 27, get below Friday's low, we can see a nice push against the squeeze tops on the indices today. But if we can't get through Friday's low, or we bounce back above 27, turn it into support, the market's probably going to reject squeeze tops and come back to test the daily means. And if 27, kind of gives us a double bottom and starts trucking above, if VIX gives us a double bottom and starts trucking above 27.5, it could be making a rush back to those daily moving averages as they are all crossing over. The 21 and the 8 are crossing over the 50. So that's your guide today on VIX. Hopefully you guys found this helpful. Thanks for tuning in, and we'll see you in chat today. If you're new to Predicted Trades and this is your first time listening in, check out our website or the description of this video to get a link to join our Discord, where you can start to learn our system for free. And you can even upgrade in that Discord to start using our system every day. Have a great day, folks. Thanks for tuning in.